Hi, I'm Dan Rowan, Executive Director in charge of Risk and Portfolio Management at KPI Capital, and I'd like to welcome you to this presentation on what is a chart. Okay, so let's look now at charts, which is the basis for technical analysis. What they call technical analysis is the study of the market behaviour, as opposed to fundamental analysis, which is the analysis of economic factors and other factors that drive the price of a particular currency. What we're looking at in technical analysis is just the behaviour of the market. What has the market done? And the primary tool for technical analysis is the chart. Now, this chart that we're looking at is the Aussie dollar against the US. AUD/USD is the name of the pair, and what we're looking at here is a bar chart. It's the type of the chart, and it's on a day time frame, which means that each one of these bars represents 1 day of trading. And the chart is set up such that across the bottom axis, we have time, and on the vertical axis we have price. So we can see just by looking at this chart that this year, here's the start of the year, January 1st, that we've seen a big drive up on the Australian dollar, and then we've seen price stabilise at that high level, and in the last few days it's come back and it's worth less. We can tell all of that at a glance. Now essentially the three main types of chart that people use, this type, the bar chart. We also have the candlestick chart and the line chart. I'm going to start by having a closer look at the bar chart, which is my personal favourite and the one that I use for my technical analysis. So a bar chart gives us a lot of important information at a glance. Each bar gives us 4 very important pieces of information. I'm going to zoom right in here so that we can have a close look at these bars. Now, as I said, each one of these bars represents, in this case, on this chart, a day's worth of trading. We can easily change that. This is a 60-minute chart. Each one of these bars now represents 60 minutes, 1 hour's worth of trading. This is a 5-minute chart. Each one of those bars represents 5 minutes worth of trading. I'm going to go back to the day chart, and we'll just have a look at one of these bars and see what it's telling us. You can see each bar has this vertical line, and it has a little horizontal dash on the left and a horizontal dash on the right. The vertical line represents the range of prices that the asset has traded at in that day, or in the scope of that bar. Again, this is a day chart. If I hover my mouse over this bar, you'll see this window here giving us information on the open, the high, the low and the close. Now all of this information is contained at a glance in the bar. So I'm hovering over this bar, which is yesterday's bar. It tells us that the high was 1.05820 and the low was 1.04740. Now the high is represented here by the top of the bar, the low represented by the bottom of the bar. Very straightforward. Now the dash on the left represents the open price. That's where price started, where the asset started trading for that day, for that bar. That open, as my little text box up here is telling me, that open is 1.0573. And then lastly, the little dash on the right of the bar tells us the close price for that bar, which in this case was 1.05099. How you analyze this varies very much from person to person, but the main thing to take away from this just for now is the information that you can get from this bar. How you choose to use it is a very complicated question, and one that we'll touch on, but the bar chart can help you with whatever your strategy is by giving you all that information at a glance. Now the next type of chart that I want to look at is a candlestick chart, another very popular chart. Essentially contains all the same information that a bar chart contains, it's just represented visually in a different way. You can see each one of these is called a candlestick. A candlestick chart, you can sort of see why, it's a visual thing. Now you've got what's called the wick, which is this thin part of the candlestick, and the body, which is the thicker part. Now if you'll remember, on the bar chart we had a little dash on the left of the bar to indicate the open price and a dash on the right of the bar to indicate a close price. Well, this thick part of the candlestick represents all the price action between the open and the close. A red candle means that the close was lower than the open, and a green candle means that the close was higher than the open. So if I take this red bar here, you'll see that this thick body part of the candle represents an open up here at the top of that thick part of the candle, a close down at the bottom of that body of the candle, and the thin part of the candle represents the range of price traded that day outside of the open and close. So here we have an open up here, close at the bottom of the body. With a green candlestick, we know that it's opened at the bottom part of the body of the candle and it's closed at the top of the body of the candle, and the thin wick of the candle represents the range of trading in between. As I said, the same information that is represented by a bar chart, it's just represented in a different way, and a lot of people really like them. So I'm going to move on now to the last type of chart that I'm going to look at, although there are more than just these three, but just for our purposes of just an introduction to charting, the last one we're going to look at is a line chart. Now this contains a lot less information than the bar and the candlestick charts. All we really have on a line chart is information typically about the close on each day. So all we're seeing here from day to day is the close value being represented on this line. We can't see the range of trading on any given day, and we can't see where that day's trading opened, so we're seeing a lot less. As I said, you can actually set a line chart to represent any of those criteria: the open, the high, the low, or the close. They're typically set to the close. They can be very useful. For instance, we're seeing here a very clear, what they call a double top pattern. There are certain circumstances in which they're very, very useful, and a lot of people use them in their analysis, but as you can see, it's just a much more limited portrayal of the price action than what you get with a bar or a candlestick. Okay, so there's three chart types to get you started anyway. You can see the various attributes of those three different charts and the sort of information that you get from them. A lot of analysis techniques are based on each of those types of chart, and you're going to have to find for yourself the system, the methodology that suits you, and then choose the correct chart for the job.